before we finish up is HECM for purchase. That's a home equity conversion mortgage, the FHA reverse mortgage program. It can be used for a senior to buy a home. I'm actually handling one of these right now. And it's gaining more traction. Of course, as we all know, some folks complain about it. We have a big baby boomer population, and of course, they've eaten up all the homes. But you know what? A lot of those folks, I think, are getting older. You're going to start to see them downsize, and that provides opportunity as they downsize and they're fully retiring. The HECM for purchase can be a great tool to meet that opportunity. And let me give you a perfect real life example. I've got a guy who I just sent a proposal out. He is selling a property in Wisconsin, and he's going to move to the Palm Springs area. He's expecting about $450,000 of proceeds. He's 67 years old. He is interested in using a HECM reverse mortgage as the purchase loan. We prepared the proposal, sent it to him. Remember I said for $600, for somebody who's younger on the age scale, closer to 62, you're going to get less. Well, in his case, turns out it works pretty much perfectly. For $450,000 that he would use in proceeds toward the purchase, at his age, he can get a HECM reverse mortgage loan amount of about $200,000. So this is going to allow him to buy a home for about $650,000 here in the Palm Springs area. That is a buying down in value situation. His home in Wisconsin was worth more. So he's buying down in value, relocating here to California in the Palm Springs area. He'll use his $450,000 sale proceeds, get a $200,000 HECM reverse mortgage, and he'll be able to, of course, then live in that home without having to have any mortgage payments at all. So basically, that's how it works. That's essentially the structure. As you know, the Jeff pulled up the bullet point there. You have to bring in the difference as cash. The 450 in the example I just described, that's the down payment. The HECM loan amount is $200,000, and therefore, when you close, you got a home with a $200,000 mortgage on it. You bought it for $650, so you're starting off with that $450 in equity, and but you don't have to make a payment on that loan unless you want to. Again, can't stress enough. You can make a payment if you want to, if you don't want to have that interest accrue. But in his case, he had no heirs. He's not concerned about that. He wanted no payment. So again, benefits, somebody who's downsizing, like my current client, he is relocating, not for family or care, but relocating here to Palm Springs is considered, of course, a retirement community. And of course, transitioning to accessible retirement homes is a good use of the reverse mortgage, not in this particular case, but it's another very common use for this loan product. And it can also depend on the financial, when we talk about financial dynamics, what we're talking about there is a couple of things. First, what I just described in terms of the loan amount you can get based on your age, but also when you get one of these loans, you are going to go through financial assessment. So that can have some impact on your available proceeds from the loan. If it's determined through financial assessment, you're going to need help in maintaining certain property-related expenses, such as property taxes, homeowners insurance, HOA dues, maintenance and repairs. So in some cases, the financial assessment may determine you'll have to get what we call a LISA, life expectancy set aside. So that's where some of the proceeds are pulled out of the loan and set aside, kind of like an impound account for taxes and insurance. And then that money is drawn on, again, to maintain taxes, insurance, and so forth. So in that case, we have to take into account that can affect your proceeds that are going to be available for you, and that could increase the amount of down payment when you're using this product for a purchase transaction. Again, the pro is no monthly payments. You are going to see some impact on your real estate equity over time, but in a majority of cases, that home survives positive equity even at the point the homeowner passes. But each case is different. And again, you'll get a full proposal year by year up to age 100 that would show you the relative growth of the HECM reverse mortgage with no payments being made versus the appreciation in your home value using a 4% rate as the average. So you can see how the difference in equity changes over time. So that's fully disclosed. And of course, we're there to answer all your questions about that. So again, if you're interested in this, we'd be happy to put a proposal together for you. And then we can talk about next next steps, including counseling and so forth. Hi, Jeff.
Hey, Art, just one quick clarification. So, in your example, the gentleman netted proceeds from his sale in Wisconsin of $450,000. He
Yep.
came over and bought then in Palm Springs, and he used the 450 as a down payment. Then he used a HECM and got back $200,000. Is that correct?
Yeah, it's basically the same as let's forget about HECM for a second and just say, and this happens. I got somebody who comes in and says, I'm going to buy a $650,000 house. I sold my house in Wisconsin. I got 450. I'm going to put that all down. I want a $200,000 loan. That's normal every day. We all understand what that means, right? And then what happens is everybody gets flustered when we say a reverse mortgage to purchase a home. It's the same exact thing. You see a home for 650. You just sold your home in Wisconsin. You got 450 in your hand. You want a $200,000 loan. In your case, we do have to go through the calculations based on your age, what's actually available. In this case, it was 200,000 available. So he's buying this home with his 450 cash and a $200,000 mortgage. It just means, but in this case, that mortgage is a reverse mortgage, not a traditional, what we call forward mortgage.
So he never got any cash. He didn't get $200,000 back. He just got a mortgage that if he chose to not to ever have to make a payment on.
Correct. That's the key difference. And Jeff, you bring up a very good point. That's a key difference for anybody who's looking to use a HECM for purchase, because with that scenario, your intent is you're going to have a certain amount of cash you want to put toward the property. You're hopeful that based on your age, you can get enough HECM reverse mortgage amount that when added to your cash, you're going to get to the purchase price that you desire. And that way you can close on that purchase price, on that home for that purchase price. And you'll have a mortgage in place, but you don't have to make payments on it. But you have to also understand, with that mortgage in place that was used for the purchase, those other access options we talked about earlier are not there. They're gone.
Gotcha.
You can't set up monthly payments for 10 years. You can't set up monthly payments for lifetime. You can't set up a line of credit because you already used it all for the purchase. So your sole benefit on a purchase HECM is purchasing the home, getting a mortgage to cover the shortfall between your down payment, your cash money, and the price of the home, and be able to bridge that gap, but not trigger a mortgage payment you have to make.
It's almost a feeling, Art, and I know the numbers are not exactly this, but it's almost like, hey, he just came out here and bought a $650,000 home for $450,000, even though he still has a loan on it, but he's not obligated to pay on that.
Exactly right. That's right.
That's a beautiful strategy.
And for senior homeowners, sometimes what happens is they have unrealistic expectation on what they're going to get out of the sale of their other home, whether it's in another state or LA or Orange County or San Francisco and so forth. And maybe they already had their minds made up on a certain price level in another market like ours, and they get their home finally sold, and it's like, whoops, we're 300,000 short of what we thought we were going to get, because this place in Palm Springs, we were going to pay cash, and now we can't. But we're 78 years old, and luckily that 300,000 gap we can make up by reverse mortgage, so we still feel like we got it for cash because we're not making a payment.
I think
that's the way to think about it.
That's a beautiful strategy, and I tell you what, we've done a lot of shows, Art, and I don't think I've ever heard you explain it this way to buy a home. Is this new? No,
that's the point. Is it's here. It's been here. It's an option that's readily available, and we do have people who use them. Again, I've got a guy, the guy I mentioned in this show. He's looking at houses right now, so it's there, and we're trying to get the word out that this is a great opportunity for a senior homeowner who's because there's a lot of them out there. There's wherever they worked and lived for 30, 40 years, are selling everything. They're moving to a retirement area. They're downsizing. They prefer pay cash, or at least not have a mortgage payment, because that's the other thing. You may decide to buy and you want all cash, and you can find a home you like all cash. But then the reverse mortgage, what does it do or could do for you? You say, okay, well, wait a minute. I like these homes I can buy for $1.2 million, but I don't want to go to $1.5 million because I don't have enough to pay cash. Well, buy $1.5 million and get a reverse mortgage to cover that 300,000 difference, and here you got that much nicer a home that you really preferred anyway, and you still feel like it's for cash because you don't have to make a payment. So it can
That's
help
just
you. It can help you extend your purchasing power to higher price levels if you want to do that.
That's brilliant. I love it. I love it. Art, thank you so much. You're just such a wealth of knowledge, and the
Sure.
creativity with this is just it just makes so much sense. Thank you.
Sure. You're welcome, Jeff. Well, thank you everyone for watching this week's Mortgage Minute. My name is Art Alvarez with MortgageWorks, where we have the answers and they're on the house. Again, enjoy the weekend. We're going to be cooling off here. Hopefully you're cool and comfortable wherever you are during this summer of 2025. So again, take care. We'll see